First of all, on the markets, we've now seen payrolls pass through in the United States. The focus is shifting to CPI. What do we need to see from this data set in order for this to be a catalyst for equities?
Yeah, I think what's really important right now for markets is to get confirmation that the inflationary trajectory is moving in the right direction, not just on headline, but also on core inflation. I think that's really the one last missing puzzle piece that markets are looking for here. We've seen producer prices, we've seen energy prices, we've seen headline inflation go quickly in the right direction. But now, of course, we need to see movement on core, and that means that goods and housing, which kept core back over the last 2 months, need to really show improvement. So I think that's going to be really important for markets here. Signs are pretty good, like I said, because goods were pushed higher by these used car markets. We know that that's rolled over. The Manheim Index has rolled over hard, but we need to see confirmation in the data. So I think that's really important, especially because the NFP report, although it showed that the labor market's cooling down, clearly also showed that the state of the labor market, the levels are still very high.
Yeah, absolutely. And Wouter, as we look at that data in the United States, I want your take on what's happening in China as well. We've just seen authorities announce more stimulus measures within the property sector. Are we going to see more stimulus for other ailing sectors of the Chinese economy, particularly in light of recent data there as well?
Yeah, if we look at the complete picture for China, one of caution continues to be the overall conclusion that we take. So yes, it's good to see the Chinese government today take some efforts to at least boost that ailing property sector, as you rightly put it. But is it going to be enough? Is it really going to be a game changer? We remain cautious on that front, very simply because we know how hard it is to regain trust in something as important as the housing market. It just takes time for the consumer to really get going again and really feel confident that that's the place they want to put their money. So we think it's a good step of the Chinese government in the right direction, but certainly not a game changer, and certainly not enough to really sort of change our overall view of the Chinese economy, which is still one that we think is dominated by caution, by the fact that the overall economy is just not in a very good place right now. And we would need to see a lot more, a concerted effort, fiscally and monetary-wise, so lower interest rates, to really change that picture. I also would note that the role China's playing here in the global economy is getting really interesting, because where everybody expected China to sort of be an inflationary force, it's turning into a deflationary force. And I think that's something we all need to take into consideration as well.